Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, for the first time in what feels like a long time, we're actually a bit more focused on exchange rates rather than every other piece of economic news. And that really is because of how fundamentally you're starting to see that decline come through in the New Zealand dollar. It's not just us though, we've seen most other major currencies decide to take a pretty strong back seat, if you will, compared to where the US dollar is sitting, with the US now sitting at, I think, its strongest point since 2002. The Kiwis lost, what, odd 20% since over the last 6 months or so. What is going on the currency front?
Yeah, I mean, it really is investors around the world rushing towards a safe haven, worried about global growth and the chances of a recession happening around the world. And typically what we see when that occurs is that it's mainly the big three currencies, the US dollar, the euro and the yen, that tend to get favoured. We're seeing it with the US dollar in particular at the moment, while the euro, of course, is having its own problems with the conflict in Ukraine occurring and high energy prices. They're both placing some pressure on the European economies that America is not facing. And then over in Japan, nobody's expecting interest rates there to rise anytime soon. That's been par for the course for Japan for the last 30 years. And so investors are looking at that and saying, well, we're not getting any returns in Japan, so the US very much flavour at the month. And so while we've seen the New Zealand dollar shifting down from, I think, around about 72 cents against the US dollar back in October last year, it's been a steady downward trend. Now we're pushing into the sort of 56, 57 cent range. The shift down against the other currencies has not been as large. And in fact, against the yen, we've been rising because that yen has been so weak.
Yeah, and I mean, it's sort of at the same time, we've got a lot of ructions, if you will, over in the UK, which has sent the pound into a bit of a short-term death spiral, at least, given some of the changes that have been announced by the new Truss administration, cutting taxes and really taking on board some huge fiscal stimulus at a time when inflation is so hardcore. At the same time, you sort of look across the ditch there from their perspective, and in the US, like you say, the dollar is strong, and really because you're starting to see such large and sustained interest rate hikes and an expectation, right, from the Fed that they're going to continue to do that. Not only is there sort of a worry around inflation, but I think as well, realistically, you've got people who are going, look, where is there a return? Well, if interest rates are going up in the States, then actually that's where I can get something. Like say, I can't get in Japan. I'm too worried about getting it in Europe, so the US is where I'm looking for. All of this, though, realistically makes it a lot more difficult to unwind inflation, presumably. It's going to increase our own, inflated imported costs, but equally sort of ties our inflation expectations a little bit to how quickly or not the US is able to get their inflation under control. Because until that happens, until the exchange rate starts to get into a slightly more stable position, it is, one, going to support our exporters, which is good on one hand, but realistically sort of prolongs that inflation pain for a while, right?
Yeah, that's right. I mean, we've seen import prices rising somewhere in the order of 15 to 20% over the last year, and a lot of that is exchange rate related. A big chunk of it, of course, is higher oil prices as well. But with that exchange rate continuing to push quite sharply lower over the last few weeks, that's only going to feed through into more imported inflation in that tradable area that the Reserve Bank, apart from influencing the exchange rate, they can't do a lot about that inflation that's coming in internationally. Obviously, the interest rate rises we're getting here at the moment are very much focused on trying to quell demand within the New Zealand economy and try and get some of those domestic pricing pressures under control. But at the moment, yeah, I mean, it does raise questions about just how quickly inflation does sort of turn around or start to be brought under control. The exchange rate, like you say, helping exporters, and we've seen commodity prices have eased a bit. So there's some good news there in terms of cushioning the blow for provincial economies, but making the cost of everything we're importing that much more expensive. It's been an ongoing battle, of course, given high international shipping costs and supply chain disruptions, shortages of materials internationally. And so the exchange rate just sort of adding on a longer tail of higher import costs, really raising pressure on there. I mean, I think the other issue, of course, is just around what it means for our own interest rates and the Reserve Bank having to push those higher as well. It's interesting, of course, what we've seen over the last year is though we've been raising interest rates, because that pressure in America has been even greater, particularly through the course of 2022, that's led to the American dollar rising much more rapidly, even though we've got those higher interest rates coming through here, which normally would be something of a support for the New Zealand dollar.
Absolutely, and I think realistically, when you look at what the Reserve Bank is going to have to sort of weigh up when it comes to interest rates into the future, that lower exchange rate is going to be sort of something that they will have to consider. They'll have to look at just how much that might prolong and sort of maintain those inflationary pressures, and would realistically, see them try to raise interest rates probably more than otherwise, all else being equal. But importantly, not trying to actually target the exchange rate, right? I mean, New Zealand, we're just not going to do much on the international stage, especially given it's not really us. It is very much them in terms of the US is leading this and leading the pack. All currencies are sort of suffering by the wayside. So I think it's the sort of thing where the Reserve Bank will be looking at it closely, but realizing it can't win the wider exchange rate war, but it will have implications for the inflation outlook. We'll consider how much worse, if you will, the exchange rate might get, what the implications for interest rates are, and how the rest of the world reacts on one of our future editions of Econ Talks.